For you this evening, but on what's brewing today, Neo Growth, an MSME-focused digital lender, has raised 300 crore rupees in a Series D equity round led by FMO, a Dutch entrepreneurial development bank, along with existing investors. Now, off the fresh equity capital, 160 crore rupees has been pumped in by the Dutch lender that will be used for on-lending and entering new markets. Now, Neo Growth is an MSME-focused new age lender that offers a wide range of products tailored to the dynamic needs of small businesses. Joining us now to discuss the company's growth plan is Arun Nair, the MD and CEO of Neo Growth. Arun, thank you so much for joining us on Startup Street today. Neo Growth has been a debt client of FMO since 2017, but now they've invested in your company in equity to also and will support you as a shareholder. So what's changed? What does their backing mean for the company?
See, currently, FMO has been having a relationship on the debt side with us since 2017. This participation on the equity side is going to strengthen our capital base, and we are a strong foundation is being laid for a high growth next year. So we're going to grow by around 20% this year, and the next year growth target for us is close to 40%. So this fresh equity infusion is going to strengthen our overall capital position and also going to accelerate our growth plans.
Okay, so this capital is going to accelerate your growth plans. Now, you're an MSME-focused digital lender, and you've focused on creating a positive impact on India's MSMEs by providing easy access to credit. Now, take me through the solutions you have on offer really quickly, and how many MSMEs are you currently servicing with your platform, and what would be the targeted growth in the coming year?
Yeah, so we have a very sharply defined segmentation in the SME business. So we lend money to small businesses who are consumer facing, say, for instance, a grocer or a pharmacy. And based on their digital payment history, we look at their credit worthiness and working capital needs. And we fund them for the short-term working capital requirements. One of the unique features of our model is that it's a daily repayment model. So for instance, in a typical lending structure, a term loan is paid through 30,000 rupees, say, a monthly EMI. In our structure, it will be paid through 1,000 rupees a day. So it's a lot of ease of convenience for our customers. And we are currently serving close to around 25,000 customers. That's the outstanding customer base. And so far, we have looked at around 1.5 lakh customers in the last few years.
All right. And that's an interesting model. But with this fundraise, how do you plan to grow your book? Where would you be deploying these funds?
So we currently our book size is close to 1,600 crores. Right. And we expect our book size to reach around 1,800 crores by March. So next year, we're targeting a growth of around 40 to 45%. So we're looking at around 2,500 crores of growth in the next year.
All right. And you've disbursed about $1 billion in loans. What are the typical ticket sizes? Take us through your disbursal targets going forward. And what about NPAs? What's your NPA picture like?
Yeah, so our ticket size is typically in the region of around 10 to 12 lakh rupees.
Right.
These are small merchants. And our tenor for the loans is around 18 months. Our NPA position as of last quarter is close to around 5%.
All right, so NPA at about 5%. Now, you claim to also be profitable, and your AUMs are currently at 1,600 crore rupees. Where will the next leg of growth come from? Will the focus continue to be on the daily repayment model?
So we have two large verticals. One is the retail vertical, which I spoke about. And we also have a supply chain finance vertical, which accounts for around 35% of our business. I think the growth is largely going to come from the same markets. We currently operate in 25 cities. And if you looked at the digital payments data in the country, the overall acceptance of UPI, overall digital payments is growing at a very rapid pace. Right. So all this has expanded our target segment. So we believe in the top 25 cities itself, we should be able to generate a 35 to 40% growth. Okay,
so your top 25 cities, 30 to 35% growth. Now, speaking about the cities, you're also going to use the funds for expansion. So what are the areas you're looking to expand into? What's your expansion plan?
See, our business is a fairly scaled up and stable business. Our unit economics is well established. So essentially, the money is going to go into disbursements, incremental disbursements. We are targeting a disbursements of close to around 3,500 crore next year. We currently disburse in the region of around 175 to 200 crore a month. So essentially, the funds are going to be used for incremental disbursement and growing the AUM.
Okay, so growing AUM and incremental disbursements, that's where your money is going to go. Now, speaking about digital lending, post RBI's digital lending guidelines, which are now in force, how has your workflow changed, if at all, and what adjustments have you had to make? It's still sort of a gray area, so have you sought clarity from the RBI on these?
Yeah, so we are a RBI regulated entity. We are registered NBFC, so we are a regulated entity. So to that extent, we have been fully compliant with the Reserve Bank of India guidelines on digital lending, and there have been a few incremental changes which we had to make in terms of disclosure of the exact pricing and the fact sheet to the customers. But beyond that, there is no major implication on neo growth. So we are to that extent fully compliant.
So fully compliant and no major impact. But also now RBI's revised securitization rules disallow securitization of loans with residual maturity of 365 days or lesser. Now, as a fintech lender, how are you impacted? What is the typical tenor of the MSME loans you disperse? And do you expect the securitization volumes to fall as a result of these revised rules?
So currently, securitization is around 20% of our borrowing profile. And as I mentioned, our tenor is around 20 months. So residual tenor typically after seasoning is in the region of 15 to 16 months. So we should not be impacted significantly because of these guidelines.
Okay, so no significant impact with these guidelines. But Arun, we're completely out of time. But thank you so much for joining us on the show today. And we wish you all the best going forward.
Thank you. Thank you for having me on the show. Thank you.
All right, we'll move on to our investor focus segment because early stage investor India Quotient recently returned its first fund, which was launched 2013 with a corpus of 32 crores with a net return of 5.9 times for its investors. The venture capital fund has backed 87 plus startups so far, which includes Sugar Cosmetics, ShareChat, Lending Card, Vyapar, and many others. Now, this latest fund has a corpus, which is Fund 4 of 850 crore rupees, which is the largest so far, and it has already invested in 22 startups. To talk about the funding environment, the learnings from the first fund, and a lot more, joining me now is Madhukar Sinha, who is the co-founder and general partner at India Quotient. Madhu, thanks very much for being with us here on Startup Street. Are you satisfied? Are you happy with the kind of returns you were able to generate in your first fund? And what have been the key learnings through this?
First of all, thanks for having me. And yeah, we are pretty satisfied that we were able to create value for our investors. And this is especially very satisfying because this was our first fund. So the people who backed us and believed in us, we were able to create returns for us, create return for them. So yeah, so 5.9x is a good return, but we think that we would have done better. But there were two bad patches in between. There was a 16-17 lull period, and then there was a COVID also in between. So yeah, we will try to do better in the subsequent funds.
Well, that is always the endeavor, Madhu. But, today everyone is talking about this funding winter, overvaluations of startups, aggressive growth at any cost coming to bite founders and also investors. Now, venture capital funds were pouring money into startups last year, but India Quotient actually went slower. What has been your approach through all of this? And do you think you missed out on any opportunity because of the stand you took?
No, so I think we are very disciplined in that way. So we have a very consistent investment strategy. So here each of the partner is makes 3 to 4 investments every year, right? And it's like a allotment kind of thing, right? So you don't want to rush into the momentum and use that and invest into more companies, right? Which is not what we do, right? So we are always very particular that we have to invest in 3-4 companies in a year, and therefore we are very, very disciplined about it, right? I know the market had turned a little weird, I would say, in 20 and 21. In the beginning of 20, it seemed like everything is stopped and everything is going to be a doomsday, and suddenly towards the end of 2020, everything looked like you have to just grow, right? And you have to just spend money, and there was money flowing in the ecosystem. I think the sanity was needed. I think we'll all benefit from this, and we don't feel that
Okay.
we missed. We don't feel that.
But Madhu, you said it's been a roller coaster, right? There have been ups and downs last year and the year before that. How have your portfolio companies performed during this period? Did they also have to make some tough decisions? Were there any layoffs and restructuring among your portfolio companies? Are you worried about any of them?
Again, some of that will happen. I think we are still early because most of the companies raised capital last year. Some of them raised a couple of times. There were a few companies in our portfolio also which raised capital a couple of times. So everyone is taking a relook at their business models, their runways, and their value proposition for their customers. And most of them have course corrected. And I think uh, at least in our portfolio, uh, we hope that we will not have to do a lot of restructuring. There's of course course correction which has happened, and I think
Out of 87 startups you've put money in, how many are you concerned about?
no. So 87 companies are across last 10 years. A lot of them
Yeah,
are
the
not.
funds, 4 funds. Yeah.
So a lot of them are not. So a lot of them we have sold, exited. Some of them shut down, right? So I think at this point of time, we would be having some. I think 45 odd companies which are live and active, right?
Okay.
Out of those 45, uh, there are around 5 or 7 of them uh, which are growing organically, steady. So they are not really burning any capital, and they're self-sustainable. They are not necessarily very large companies.
Okay.
They're more self-sustainable, and then the rest of them
Okay.
have hardly raised capital in the last 2 years. So they have the required runway
Okay.
of least in the next 2 years. Yeah.
Okay, let's talk about your latest fund, the Fund 4. It's the largest corpus you've had among your 4 funds. Where are you looking for an opportunity? Which are the sectors that look attractive from a return point of view? And which are the sectors that you're going to stay away from?
I think we are a sector agnostic fund. We are generally very opportunistic in investment, right? And there are certain themes which we keep on identifying, and then once we see that some of those things start working, then we start doubling down on that. I think in this fund 4, there are 2-3 themes at least which are we are focusing right now. I think going ahead we will also come up with newer themes. So one theme is that we are looking at uh, software as service SaaS, which is basically building SaaS companies which are serving the global markets, but they are being built in India, right? So I think that's one theme which we are seeing, and I think one of the enablers for that has been the remote work, which we saw in the last 2 years. So there are companies which are now creating the software in India. Some of them are able to get their early customers without actually being
Got that.
present in the side. So that's one theme which we are following. The second theme which we are
Okay. Okay. Okay, Madhu, since we're running out of time, sorry, you said the second theme that you're following is?
Yeah, the second theme we are following is on the creator economy side. I think we have seen that there's a lot of
Okay.
short video content companies which have come up, and there's a lot of creators who have been creating content, but the monetization for them has not been solved
Got that.
appropriately. So we are looking at that team, and we have made a few investments. I think we will be making more investments in the same theme.
Okay, briefly, a one-line answer. 2021 was the funding boom year for startups. This year was the funding winter. What is 2023 going to hold?
I think it will get worse before it gets better. So we'll.
Okay.
I can't predict it, but it looks like it will get a little more worse. But then after that, it will get better. Right? I think in 3 quarters we will see that the activity will start coming to not normal, but it will be much better from where we are today.
Well, we certainly hope so, Madhu. Thank you very much for your time and for sharing your thoughts with us. Thank you.
Thanks for having me. Thanks. Bye.
Well, on that note, it is time for us to head into a short break. But coming up next, the ONDC pilot is currently live in 15 cities and has over 600 entities signing up on the network. And the latest one is delivery. We speak to the CEO on the other side. Stay tuned.
Now, logistics unicorn Delivery is the latest startup to go live on ONDC and will enable sellers to leverage the startup's extensive network of over 18,000 PIN codes in India. The ONDC pilot is currently live in 15 cities. Now, on the sidelines of the Thai Global Summit, my colleague Aishwarya Anand caught up with ONDC CEO T. Koshi and began by asking him about the key takeaways and how the reception has been from customers and businesses so far.
First was Alpha Pilot, where we started with 5 cities to have real sellers and real buyers by invitation. And to make sure that this works smoothly, we gradually enhance it to about 80 cities to have real buyers again, only by invitation. On end of September, beginning of October, we went to the next stage of beta testing, where we allowed it to be open to public at large in one city, which is in Bangalore, in limited set of PIN codes. We started with only grocery and food. About 60% is grocery now, the orders, and 30% is food. And numbers are not so large because we're doing it in a limited scale. And now the response from the sellers and buyers have been very, very encouraging. So coming months, we will enhance our outreach in Bangalore to go deeper and to have presence in practically in every PIN codes and number of sellers and buyers coming together. The buyer applications like Paytm, who had been with us from the beginning, is really going to go out and inform more of their clients. Same thing like new buyer applications like PhonePe, who's going to expected to go live in the next couple of weeks. They will enhance their outreach.
I also want to understand from you that how many startups have you onboarded on the ONDC platform till now? How many more are you looking to onboard? And could you also tell me some of the which sectors are you initially focusing on in the e-commerce space?
See, eventually ONDC will have practically every product and service available, but we wanted to build it on category-wise. We started with grocery and food. Home decor has just gone live. We will have fashion, beauty and personal care, electronics. All the standard item will get started soon. And probably next month we'll also have B2B coming in, then services and so on and so forth are coming. And we are getting fantastic participation who are interested, from entities who are interested to connect. It includes big guys and small guys. If I look at about 615 who have signed up and under various stages of evaluating and integrating with us, more than 70% of them will be young startups. And 30% will be well-established companies like whether it's ITC or HUL.
I also want to understand from you that now, ONDC aims to triple the e-commerce penetration in India to 25% in the next 2 to 3 years, up from 8% currently. So tell me, what are the challenges you foresee in doing so?
The biggest challenge is going to be when you triple, it means that 2 things have to grow. One is number of buyers and more importantly, number of sellers. See, if you look at the current the level of buyers are people who are, in a way, say the cream of the society, who have certain expectation of certain products. And when you make it more broad-based, we need to have more products being available. And that means more small enterprise, etc. will have to come. In addition to technical enablement, which the solution is already there, we also need to educate them on the processes of order fulfillment. So if you really ask me, my biggest challenge is to help these diverse entities to establish processes and committed to these processes in terms of order fulfillment.
ONDC is still a pilot project, correct? But once it's fully adopted, where do you see the e-commerce landscape grow in the next 5 years?
What we believe is that when it is fully live, every seller of every product will attempt to make their catalog visible in this open network. And diverse kind of buyer platforms will come. So it will become just an extension of commerce, not a separate sector.
Well, it is Friday and it's time to see how the startup space fared in terms of new deals this week. 16 deals took place, valued at $127 million. Some of the notable deals include MSME-focused digital lender NeoGrowth bagging $36 million from FMO and others. ERP solutions provider for schools, UOLO, raised $22.5 million from Winter Capital, Morphosis Venture Capital, and Bloom Ventures. Millennials-focused lender Zype got $18 million from Exponential Capitals and others. That's not all. Agri-tech company Cropin raised $14 million from the likes of Capital G, ABC World Asia, and Chirate Ventures. And Wellbeing Nutrition got $10 million from Fireside Ventures and others. Overall, the startup world has seen over 1,100 deals this year so far, valued at nearly $23.4 billion. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
देखो